Welcome back to Financial Accounting in the final section of Chapter 1. I've referred throughout our discussion to the story we write about a company using the language of accounting. In this presentation, we will talk about the financial statements, which are the final, formal, edited version of the story we are communicating to our financial statement readers. This section will describe what amounts belong where, how the story should be formatted, and how to read this story. The four financial statements include the income statement, statement of retained earnings, balance sheet, and statement of cash flows. They are prepared in that order because amounts are computed and transferred from one to the next. Financial statement excerpts for Google and Apple are presented in Appendix A in your textbook. Let's trace the amounts from the transaction analysis work we did last time to the financial statements. The income statement summarizes revenues and expenses and computes net income. Net income is defined as the difference between revenues and expenses. If expenses exceed revenues, we have a net loss rather than net income. Remember, the income statement starts with the good news first, revenue. Financial statements have a three-line title with the company name, the name of the statement, and the period covered by the report. I think of this as who, what, and when at the top of each financial statement. In our case, we had total revenues of $3,000 and total expenses of $800, so net income for the month ended December 31st, 2013 was $2,200. The income statement is prepared for a period of time, commonly a month or a year. However, it never accumulates amounts for more than a year. It is like the scoreboard, which accumulates points for each inning and in total in a baseball game, and then is reset to zero once the game is over, so a new game can be played. In the case of the income statement, a month could be considered to be like one inning, and once 12 months are completed, the income statement would be reset to zero to start the next year with new numbers. In the statement of retained earnings, you can see why it is not prepared until after the income statement is complete. It uses the amount computed for net income on the income statement. Notice the statement of retained earnings starts with the balance at the beginning of the period, adds net income earned during the period, and deducts any dividends paid, resulting in the ending balance in retained earnings. The company was started this month, so the beginning balance in retained earnings was zero. During December, net income of $2,200 was earned. In addition, $500 in dividends was paid, so the ending balance in retained earnings is $1,700. This will be the beginning balance in the statement of retained earnings next year on January 1st, 2014. After we complete this statement, we can prepare the balance sheet. The balance sheet is an inventory of assets, liabilities, and equity at the end of the month. It shows that the accounting equation remains in balance with assets equal to liabilities plus stockholders' equity. You can think of the balance sheet like a still from a movie or like a snapshot. It is a picture at a single point in time of a company's assets, liabilities, and equity. For S. Scott Company, total assets are equal to $26,900. This includes cash of $9,700, supplies of $1,200, and equipment of $16,000. Liabilities include accounts payable of $1,200 and notes payable of $4,000. The common stock account has a balance of $20,000, and we just calculated the ending balance in retained earnings of $1,700. Overall, creditors have claims against our assets of $5,200, and the owner has claims to assets of $21,700. You can see that the books are in balance because total assets are equal to total liabilities plus equity. The statement of cash flows is my most favorite of all because it tells us where a company got its cash and how it spent its cash. We will cover the statement of cash flows in detail in a later chapter. However, you will be introduced to it in your homework, so please read more about the statement in your textbook. For now, notice that the statement is divided into three major sections. First, cash flows from operating activities. Secondly, cash flows from investing activities. And finally, cash flows from financing activities. The statement is prepared after the balance sheet because it must be reconciled to the ending cash balance on the balance sheet, in this case, $9,700. The four basic financial statements are not complete without notes to help financial statement users understand how the amounts were derived and what other information may affect their decisions. We will talk more about notes throughout the remainder of the course. Accounting policies may affect how amounts were derived, for example. This chapter presents a profitability measure called return on assets. You'll notice that we discuss different financial ratios in every chapter. Ratios allow us to compare a company's performance from one year to the next or to that of a competitor. Return on assets is useful in evaluating management, analyzing and forecasting profits, and planning activities. Return on assets is also called return on investment and is defined as net income divided by total average assets. Net income is the annual income from the income statement, and average total assets is computed by adding the beginning and ending amount of assets for that period and dividing by 2. Remember that a company invests its money in assets with the expectation of earning net income. Return on assets measures just how effectively the company invested that money. Please be certain to read more about this subject in your textbook. This completes the video presentations for Chapter 1. Thanks for your time. I hope they are of value to you. You've been introduced to many new concepts which your homework assignments will help reinforce. If you have difficulty with the material, you might wait to do your homework until you review the comprehensive need to know on page 25 of your textbook. You can also review the practice materials that are available to you in Connect. That's it for this week. See you in our upcoming discussion about Chapter 2. And please let me know how you are doing. Thanks and have a great rest of your week.